At commodities now, where you have seen continuous decline coming in for this space. The rupee is appreciated another 1%, and while the international markets are flat as well, that seems to be putting further pressure into the Indian prices there. On your screens, the rupee is up 1.5% right now, and that has taken the prices down. In the international markets, ahead of the Fed meeting, you wouldn't see long positions being built. So 0.5% of decline coming in for gold and 1.5% down for silver. The Indian prices, of course, have fallen much more. 0.5% of decline coming in for the gold prices there as well, or rather 2% down there now. 650 rupees down for the gold prices, and the silver MCX prices also have declined more than 1,000 rupees per kg there. 1,500 now at the last count, 3% down for that one. It's been a dismal performance coming in for the industrial commodities. You have seen the crude prices and the base metal prices also continue to decline there. Let's get in then. Biren Vakil, he's commodity consultant, Paradigm Commodities, and he joins us live on the show. Biren, hi, welcome. Let's start with precious metals first. And the kind of decline that you are seeing, we have broken below 30,000 rupees for gold. How much of a further slide are you expecting?
I think in rupee terms, path of least resistance seems to be on the downside. We may see another 500 to 700 downside. And in dollar terms, I'm expecting further $20 to $30 downside.
Biren, how would you look at the energy space as well? Because we have seen a continuous decline since the Syria tensions now seem to be easing. Ahead of the Fed, you aren't looking at very long positions building up. How are you looking at the prices in the international markets and on MCX?
Market energy seems a little bit shaky, but I'm confused because the sudden jolt given by Larry Summers by pulling out of Fed chairman race. Now Jelen is look likely to be a next Fed chief, which is QE Pro. At present, market looks like in a twilight zone, but I think again for a crude and energy pack, path of least resistance seems to be the downside. I'm moderately bearish.
Biren, how would you look at the natural gas prices? Because we've seen some steady trends continue for that one. 230 holding, are you looking at more gains?
Yes, now market is in a full carry, positive carry. So I would go short in October gas around 240. My stop would be 247 and downside objective is 230. And it may extend to 225 as well.
Also, Biren, what's your sense now coming in for the base metal space? The Chinese data was positive, the European data not so positive. Markets are looking at Fed. They are also looking at the way the US dollar seems to be moving as well. And we have seen the CFTC data show decline in net longs. How would you read all of this, and how would you want to strategize this space?
Basically, metals also looks bearish because I don't believe in BRICS recovery. Muskan Ajuti is still, I believe, and I think zinc seems to be a weak metal. Good short entry around 118. I would go short. 120.50 would be my stop loss, and downside objective is around 115, 114.
Biren, what the Fed will do is pretty much factored into the markets. A $10 billion has been worked upon. How would you look at the whole base metal sector performing in, let's say, next 2 or 3 months? Are you looking at a 5 to 7% move down, 5 to 7% move downside?
I think market has fully priced in 10 billion or maybe 15 billion QE reduction. But my gut feel, my inner speculative gut feel says Fed may refrain from the reduction and may surprise the market. If that happens, we may see a violent upside move, which would be a selling opportunity in metals as well as in precious metals as well.
Well, that's about the non-agro space, but the agro space has been buzzing as well. And Biren, what's your sense coming in for the edible oil space now? Because this is one area that has been moving with the rupee consistently.
Oilseeds market is reacting too much towards rupee, as good as a proxy contract to rupee dominated in agri markets. Here I am pretty bearish on rapeseed market, which is well supplied. About soybean I am clueless. Soybean oil also I am clueless.
But then also the pulses is another space that has been moving quite strongly. We did see upper sides and the lower sides as well. It seems to be trading in a range right now, but at around 3,100 odd kind of levels, how would you want to trade that?
Here China looks a safe entry for short side of the market. I would prefer to go on all type of shallow rebounds towards say 3200, downside objective is 3100, maybe 3050, and stop loss would be 3250.
Let's get in a voice then from Kaushal Jaini on most of these commodities and how you should be trading them.
On the domestic front, given the factor that rupee is appreciating, we would see a correction in gold, and gold can easily go below 29,000 on the domestic front. For the day, one can go short on rise at 29,750 with a stop loss of 29,860 and a downside target of 29,500 levels. For the day, one can go short in silver on rise at around 49,700 with a stop loss of around 50,050 and a downside target of 49,000 levels. China's numbers were very good. The Indian IIP numbers were very good, and the expectation of US IIP numbers on the positive zone for the prices of these pairs metals could trigger an upside movement. For the day, one can go long in copper at around 453 with a stop loss of 451 and an upside target of 457 levels. One can go long in nickel at around 870 on the domestic front with a stop loss of around 860 and an upside target of 885 levels. For the day, we are expecting crude to bounce back to around 67,070 to 6,800 levels. So one can go long in crude at around 6730 on the domestic front with a stop loss of around 6,700 and upside target of 6,770 to 6,800 levels.
Let's get in then Hitesh Jain from IIFL, and he would join to tell us on how he is trading all of those commodities. Hitesh, hi, welcome. How are you looking at the gold prices? Because we did see levels of $1,304 per ounce in the previous week. We are making lower lows. Are you looking at further decline?
See, for this week, the market focus is accentuated on the US FOMC policy decision, whereby the market expectation is clearly calling for a moderate tapering in the bond buying program. There is so much noise as far as the SEP taper is concerned, so we would prefer to remain on the short side. In addition, the impetus of the Syrian crisis is actually relegated on the back burner, where Russia and US have made some agreement as far as the handing over of the chemical weapons is concerned. So considering all this, I think we would prefer to sell gold, and I think 1350 seems to be a strong resistance as far as COMEX gold is concerned. On the MCX, I think we would prefer to sell around 30,000 levels. For today, I think 29,700 seems to be a decent entry level, where we're looking at target of 29,400 and would prefer to keep a stop loss at 29,880.
Hitesh, as has been the case in many past sessions, there has been a contra call coming in for natural gas prices. So even as there is a decline coming in for crude, this space really seems to be trading steady.
See, on the fundamental front, things may not be that encouraging or inspiring, but if you look at technicals, regardless of every fall, it again is successful in reclaiming those 3.6, 3.5 levels on the NYMEX. And I think something, again, I would again reiterate that something is definitely brewing in, and we would see prices moving towards 3.8, 3.9 levels in the coming weeks and the coming days. On the domestic front, effectively, I think for today as well, I would prefer to buy around 230 levels, and again looking at target of 236, 237.